we had to figure out ways to process documents at scale, leveraging not only the underlying foundational models that we're using, but also how we're building the vertical structures above it that allow for us to have very intentional cascading strategies around how are we breaking down the document sets so that we can actually focus the LLMs to have really high performance. A general foundational model is not going to have that information. And so leveraging both allows for us to just make it helpful and easy for the user because they just want that. They just want it to work like magic.
Welcome to the PL. I'm your host, Turner Novak, founder of Banana Capital. Today's guest is Ryan Sachtjen, founder of Threeflow, building software for employee benefits brokers and insurance carriers.
It's an area that most people don't know much about.
Our conversation starts with a deep dive into the nearly $2 trillion employee benefits market.
Threeflow sits in between those two key stakeholders of employee benefit broker and employee benefit carrier. For a lot of these employers, the benefit package is about 25 cents per dollar spent.
We talk about insurance more broadly.
This market is unique in that the smaller entity actually has more leverage and power. Insurance companies are sales companies that just happen to also do insurance. There are some insurance companies where all of their tech stack, they custom built themselves.
AI opportunities in insurance.
Historically, the way that these two parties worked together was very analog in nature. Spoiler alert, it's a bunch of people that are just hand keying information into these various systems.
When his wife got cancer 2 months after closing a seed round, and how his co-founders adjusted to support him.
16 rounds of chemo, 3 surgeries, 25 sessions of radiation. Just have them focus on maybe an area that they're really, really good at intentionally, and just like all this other shit, we'll take care of it.
And lessons for anyone kickstarting a marketplace.
Everyone is in. They're like, body language is good. They're like leaning in, and we got them at that moment. And then at the very end, their senior, I think it was their CIO or CTO, asked a very valid question, which was,
a quick thank you to Joe Floyd at Emergence and Rick Zulo at Equal for introducing me to Ryan and helping brainstorm topics. A reminder, I publish new episodes of The Peel every week, exploring the world's greatest startup stories, just like this one. Tune in over the next few weeks for conversations with the founders of Gamma, Handshake, WordPress, and Intercom. And now, a quick word from Bolt before talking to Ryan. This episode is brought to you by Bolt. That's Bolt.new, the easiest way to turn a text prompt into a full stack web and mobile app. Bolt is one of the fastest growing software products ever, hitting 50 million in ARR 5 months after launching, and regular listeners of the show might remember when I had Eric Simons on, where we went deep into their 7-year journey to overnight success, including almost shutting down a few weeks before launching Bolt. They're now hosting the world's largest hackathon with over $1 million in prizes, kicking off May 30th. Over 30,000 people have already signed up to build apps with AI, no coding required, 50 IRL meetups worldwide, and over $1 million in prizes. Whether you're a founder, creator, student, or anyone sitting on an idea, this is the moment to try it. It's free to join, and you can win real prizes like best one-shot prompt, top build in public journey, and most likely to get funded. Sign up now at hackathon.dev. Tap the link in the description or head to hackathon.dev, hackathon.dev. Ryan, welcome to the show.
thanks for having me.
Thanks for coming on. I feel like this is the furthest out episode I've ever scheduled. We were like 2 or 3 months out. We're like, all right, let's do it.
We did it.
May 9th?
Yeah.
Whatever. So
yeah.
I think this will probably come out in a month or two, roughly. Okay. But really quick, for people who are not familiar, which is actually probably a lot of people, that are regular listeners of the show. What is Threeflow for people who don't know?
Yeah, Threeflow it's a B2B marketplace. We're in the employee benefit insurance business. And so where we sit is in between employee benefit brokers who represent employer clients and employee benefit insurance carriers. So if you think about people today that work at a job and receive benefits from their company and what those benefits are, medical, dental, disability, life insurance, all of those things, there is a lot that goes into that decision-making process of what are the benefits that are offered? And then ultimately, how does that show up for me as the employee? If you think about the decision sort of pathway for that to be true, it goes into leadership within that employer. So HR team finance team. And typically those individuals and teams work with an employee benefit broker who is their advisor to help make decisions around what should we offer, which is fundamentally an easy question, very simple question. It's actually quite difficult to answer comprehensively because it differs by employer. And so they work with this network of brokers to help in that advisory step. And then the advisor works with a collection of insurance companies. So where Threeflow sits is in between those two key stakeholders of employee benefit broker and employee benefit carrier. And we help facilitate a way in which these two parties work together in a more collaborative and comprehensive way. And so we built this marketplace that allows for brokers and carriers to work together more effectively.
So how does that play out? Like what exactly happens when you're sitting in the middle there?
So if we think about what happened before sort of Threeflow entered, historically, the way that these two parties worked together was very analog in nature. So
is this like emails
mostly? And documents. Okay. And so if I am the employee benefit broker, I'm going to email a bunch of insurance carriers and ask for them to basically provide me a quote.
This is on a per employer corporation
basis.
Or per employer
That's
basis.
right.
Okay.
And so typically there is a listing of employees that need to be insured. And then there is specifications around what is the product, whether it's medical, dental, life disability. I want to tell you what I want you to quote. And then I want you to quote it across this population of employees. And so these insurance companies would receive that via email. They would then go into their own work streams and process. Spoiler alert, it's a bunch of people that are just hand keying information into these various systems to develop what is the price for that insurance. And then that insurance company would respond back to the broker, email and PDF documents to say, here is my proposal. And so now an employee benefit broker is going to read a proposal document, and then they're going to go through all of the items in there and then wait for it, hand key everything into like a spreadsheet so that they can go back to their employer client and say, hey, we went to 10 insurance companies. This is the market response. Do you want to keep your current coverage, current carrier, or do you want to move? So the entire thing is wildly inefficient, and it actually just doesn't lead to the best outcome for that employer to make the best decisions for their employees, because a lot of times it's just kind of doing the work to get through like, what do you have today versus what's a possible option for tomorrow. And that was the opportunity that we saw. It was, our experience on the wholesale side for the insurance carrier is the opportunity to allow for these two parties to work together like on one shared platform with one shared data set of information. They could actually drive forward a lot better outcomes. They could just collaborate more deeply, and allowing for there to be more focus on time of the 201, 301 level advising and thinking that needs to be done.
So just like slightly deeper, more advisory maybe versus just like, here's some quotes.
That's right. Because it's, if you're spending all of your time and bandwidth as an insurance company or as a broker in just like the manufacturing of it, you've got very little time to then be more advisory and consultative, which is fundamentally why an employer works with a broker and advisor, is they want them to be that. They want to be an advisory layer. But it doesn't happen enough. And so that was the area that we saw a real opportunity if we could interface between these two and have one system with different workflows and views, but shared information, then you really unlock a lot of possibility.
What was the most surprising thing when you first got in the industry? Because I think you said you worked in the industry on the wholesale side. So that's selling. Is that selling for the carrier?
Selling for the carrier into the broker, and then trying to acquire the broker's like underlying employer clients.
Okay. It's kind of interesting. Yeah. So like you're really going after the employer clients, but is it that they're just kind of so small that just working with the brokers makes things more efficient for you as a carrier?
That, and the overwhelming majority of employers today utilize a broker, and they do so because a broker it performs that like advisory function. And so it's very typical that we get the question a lot of the role and utility of the broker function.
Yeah, because you should, in theory, you might think there's a middleman. You should remove the middleman. That's generally, a good thesis for building a company.
And this is the classic question that we will get from someone on the investing side of, so your play is to disrupt the broker, let's rip and replace.
Yep.
And what we knew from our experience was the enablement model is actually more interesting because it drives more value to the end user. And if you think about the utility of the employee benefit broker, they are the extension of the finance and HR team for these companies. Give you an example. Paid family leave is a regulatory stipulation in now, I think they're up to 13 or 14 states that mandate you have to provide this like paid insurance coverage if you're on a paid family leave. If you're an employer and you've got an operations in 10 states, you need a place to go to understand, hey, I've got some folks that are in Colorado. What's my exposure on this?
Yeah.
And this is like the ongoing functions, an example of the ongoing functions that they do in addition to budget creation, budget advisement, human capital strategy as a broader term. And so for us, we like the enablement play, both from a opportunity for us to grow the business faster, because if we acquire one broker, that means we access all of their underlying clients. So I like that part of it, but also in terms of just being most helpful. We do think that the enablement of allowing the brokers to be more efficient, to more effective and work better is the way that we can drive value to that broker and then inherently more value to even the carrier as well.
Because it sounds like there's just different layers of complexity with the different states you mentioned, all these different regulations and rules, but also different carriers might have different products. Am I right on that? So like someone might do just medical, some people might do property and director's insurance or whatever. So I guess it's kind of like it makes it even harder to just kind of skip and go direct to the company when they're like, they need different products, they need different expertise in different places depending on what they need.
Yep. There's an expertise element to it. And there's just a simplicity of how do we make it easier in, we give you a method to be able to work. We have one operating system that allows for you to work with a bunch of the supply side carriers as a broker. And I think what we observed was there was an interest for, if you think about the employee benefit broker today, it's a professional services company, typically a relatively small organization. And they want and need a technology stack that works for them. But historically, that has not been the case. They've used older legacy software systems that haven't been of high value. And so what they've typically done is built their own work streams that are largely based in Microsoft products and workflow documents and things like that.
What are the software tools? Is there like some kind of a database thing that was made in the 80s or the 90s that they use? Is that the stack currently?
It is. I mean, it is. There's a agency management system stack, which are pretty old legacy systems that they will typically use as their back office for organizations of clients, policies, and then compensation for their producers, and also just some basic information about their customers. But it is limited on its functionality for sure. And so there has been this thirst for, how do I find something that allows for me to operate my business better and more efficient and effective? But there hasn't been a huge tech stack that has been available for this segment of the industry, especially one that is as large as it is in terms of just like dollars transacted.
Yeah, what's like the, I don't know, market size TAM if I'm using the VC lingo on this?
I mean, the rough estimate each year is in the healthcare spend space, it's well over 2 trillion a year. And if you break that down further into like when you pull out Medicaid, Medicare, and you just include the like employer sponsored, you're still at like well over, 1.5 to 1.8 trillion dollars that is transacted across all of the premium, across all of the employers across the country. And so it's massive, right? And it's controlled through this distribution network that's actually fairly small. If you think about the number of individuals that are employee benefit brokers, employee benefit carriers. Yeah. And was always a bit of the joke when I was on the wholesale side in talking to friends that were in other areas of trading, finance, explaining like, this is how this transaction works, where I'm emailing things back and forth 25 times. And it's a multi-million dollar like opportunity from a premium standpoint. And this is the way that it comes together. And it usually would make people snicker of like, that can't possibly be the way that it works. And it's very true. It's very true.
Yeah. Well, you think of like Facebook or Google ads, you can spend $1 on Facebook and it's like the most automated, machine learned, like possible thing on earth. Like they put so much data science and research into this. And it's like, you spent $1 to show someone an ad. And then this on the other side, it's like, Walmart or, a Fortune 5 company buys an insurance policy that they pay $50 million for, and it's just some emails back and forth.
It's just some email. And that's the thing where I think our point of view in understanding the business was helpful, because there's a lot that goes into that. And there's a lot of nuance that needs to be true that you have to be able to deliver in order to help that problem. It's very easy, I think, to say unilaterally, this is obviously something that we can improve and make more digital. But then when you like actually double click into it, there's a lot there.
What's like sort of the take rate then on different levels of it? Like when a broker sells a policy to a employer, and then like what does the carrier get in kind of, I don't know, profit or cut take rate throughout kind of like the value chain? How does it work?
Yeah. I mean, if you think about from a carrier perspective, when they think about $1 of premium, they then break that down into, what is the claim cost of that? And so there are certain products that are high incident, low severity, meaning like you're going to use it a lot. Medical is actually one of those where you're using a fully insured medical product. And so there's a bunch of claims that are happening every single day. And then there are some products that are like high severity, but low incidence, meaning it doesn't happen that often, but when it does, it's big.
It could be like hurricane or fire damage, or
even a life insurance, right? You've got a company and it's 200 employees. The frequency to which that will be a life insurance claim, it's like 1 or 2 per 1,000 is sort of like the number. And so the way that they think about it is they cut down that $1 of premium to what's the claim cost, and then what is the expense layer of that. And for a lot of the insurance companies, the majority is claim cost. And then when they think about the acquisition cost for their team, like for someone to sell a product into a broker, then ultimately into an employer, probably 8 to 10% of premium is in their distribution cost. And then the remainder is sort of running the operations of their business and the distribution costs of paying like a broker as well. And so historically, brokers get compensated as a percentage of premium, but you have seen a bit of an evolution on that, where some brokers are using more of a fee-based structure. And so it's a little split. I would say generally larger employers, if you're a broker that works with larger employers, you've got more of a fee-based structure. And if it's smaller, you typically have more of a percentage of premium. But that's typically the composition of where does the cuts of the dollars go, when $1 of premium is sold. And, the goal for the insurance companies are, of course, grow the top line as much as you can, sell as much premium as you can, retain it at the highest level possible.
Like the lowest payouts, the lowest claims.
And the lowest, and do it at the least claim cost bit. And that's where you obviously see friction and rub in, like that is a fundamental element of the economics of the business. And then how that intersects with the human element of the business, where, people obviously have a point of view on, what should go into claim decisions, whether it's fully insured medical or others. But economically, that's the big driver of, I want to grow, I want to persist, and I want to do so at a loss ratio that is as low as possible. And that's those are the 3 tenets that all insurance companies operate by.
Are there any regulations around or laws around like they need to have certain ratios from like a security of the industry or safety of the, like making sure that you can't profit more than this, or like aren't there caps or something?
Yeah, there.
Okay.
In some segments. So part of the Affordable Care Act introduced this idea of a minimum loss ratio, which was for the medical insurance product.
Okay.
And so basically what it says is if you run at a certain loss ratio or better as an employer, you get a dividend back. So you get money back into, you can either roll into next year's premium or you get that $1 back.
Okay.
So that minimum loss ratio threshold was pretty new to the industry. And it right now persists really in that fully insured medical segment as like the area where there is a regulatory element and constraints to how can you run this in a way where it's profitable, but not too profitable. And it gets to the point where then you share that back with the customer.
Interesting. Yeah. And how new-ish is that? Is this like a 5-year, 10-year thing or?
Yeah, I mean, we're within the first decade of this coming through. And so, I think depending on the product, it is a very competitive marketplace. When you think about, medical insurance products or the non-medical in particular, the ancillary market, life insurance, dental insurance, vision insurance, these carriers are running like a lot of times they're baking in a 2 to 3% profit assumption on their book. It's just their volume is so high. They've got a $3 billion book, a $4 billion book. So they spin off a nice EBITDA profit off of that. But the dynamics of it being a very, very competitive marketplace definitely compress the ability to earn a ton of profit, because if you do too much, you'll get exposed and then you'll have a retention problem. And if you go
what does that mean, a retention problem?
Meaning you'll lose business to other carriers.
Because you should have been charging a lower premium.
Right. And so if you and so that nets itself out. So there is this marketplace element that, we observe on Threeflow and from a platform standpoint of, where are carriers doing well in terms of renewing and persisting business, and where are carriers not doing well. And obviously there's a lot of dynamics that go into that input, but one of it is, are you priced competitively? And so it naturally has this dynamic effect in the marketplace that drives that price point down.
So if I was a carrier, how do I compete at the end of the day? Because it sounds like, based on everything you just said, the way that I compete is I charge a lower price and lower premium. Like what else can you do?
I think it's a classic blend of, price and service and product offerings that they have. So if you're an insurance company and you say, let's say you and I are starting an insurance company tomorrow.
Yep.
And we say, we're going to be the low cost option, meaning I'm going to provide the most stringent contract, meaning I've got the most qualifiers for a claim to get paid. And I've got the most bare bones in terms of my service structure. So I have it's all call center, it's all automated. It's a way where I'm trying to scale down all of my expense assumptions to be as tight as possible.
Yep.
The outcome of that is that you'll do well in certain markets, but not in others, because the customer type will want a different profile of a carrier where they're actually willing to pay 10% more because they want all of the other service offerings.
Like you're in the ER, you need to call and you want to talk to the CEO and negotiate what you're getting paid or something. That's probably the extreme.
That's the extreme.
The highest end.
Right. Yeah. That's your 10-star experience equivalent, right? And so then it's a classic example of, where do you want to sit? How do you want to brand yourself as an insurance company? In the employee benefit market, you think about the decision maker is ultimately a lot of times the CFO or the CHRO at a company. And so they're looking at this of what's best for my employees too. They're trying to make that decision.
Yeah, because this is basically an employee retention product
That's
for
right.
them, right? Yeah.
That's right. And a big part of the benefits package was, this is all part of post-World War II in how do we attract and retain talent. Yeah. And so a big part of it is your benefits package. And so there's this dynamic at play where it is different based off of the carrier and the profile and what you do. And you would have some success if you just said, we're just the lowest cost carrier every single time. But there's a balance to that in terms of, who's buying what and what they're ultimately trying to purchase.
And didn't the whole benefit space, didn't they make a law after World War II? You couldn't charge above a certain salary or something, and people had to compete for talent. So they started giving benefits. Isn't that kind of how it all came about?
That was a big part of the impetus. Yeah.
Interesting.
And so it then got kind of memorialized in different things, regulation wise, of what you must offer, Affordable Care Act, but even back to ERISA law in 1874. So there's moments where it just sort of formalized the way in which the benefits programs are structured and how taxation correlates to the employer. And there's these moments where it helped drive forward this idea that in the US, your compensation package is both cash and benefits. And for a lot of these employers, the benefit package is about 25 cents per dollar spent. And so it's a really significant amount. So you want it to go well. You wanted to use it effectively. And so these companies and we talk about it a lot at Threeflow, is like, what's the composition of that to try to help attract and retain the type of folks that we want to have on the team.
Yeah, it's interesting then, if you're at a startup, some of those use equity as a compensation.
That's right.
Differentiator as well.
That's right.
It's kind of interesting that hasn't really bled out to the broader industry, but I guess the pitch with joining a startup is that the equity will increase in value. It'll either not be worth anything or it'll increase in value pretty quickly. So I guess you kind of know within, a year or 3 years, maybe, like you probably know relatively soon, like, is this going to make me a millionaire, or do I join another one and try again? Basically.
Yeah. I think that's right. And I think what's interesting too is a little bit depending on kind of what's happening from a macro environment standpoint, you almost witness people as they are evaluating like an offer that would be salary, equity plus benefits. Where are they most placing their emphasis in review when there is this big upswing on, company valuations and startup valuations are going really high? The equity gets a little bit more of that focus. When the opposite is true, there's almost I'm going to think of that more as that's just the gravy bit. And I'm looking at the other two because those are known elements and entities. And I think the benefit part, certainly as we think about our team, it making sure that we feel that we've made the right choices to take care of our crew, knowing about how people go from being younger and single and presumably go down the track of maybe have a partner, maybe have a family, and like making sure that you're doing right by them, even if they're not thinking about it top of mind, which generally isn't what people that are in their younger part of their career are thinking about. And so I think there's an opportunity to make that just be something they don't have to worry about.
Well, and speaking about opportunities too, just generally speaking in insurance, we just talked about how it's so kind of, the technology hasn't evolved as well as it could have. So what do you think is kind of happening right now with insurance and like automation, AI, all that kind of stuff?
I think what's super exciting about the introduction of AI into the industry is that it is making meaningful advancement opportunities to feel attainable by...
What does that mean?
Meaning, historically, when we talk to an insurance company or a big broker, and we're talking about maybe an integration project. Hey, Threeflow want to build an integration into you, carrier, and here's all of the reasons and the systems that we want to do. There could be alignment around that outcome, like we really want to try to drive that forward. But the proposition would be that is a multi-quarter significant investment because we as an insurance company, we don't have an API. We're going to build one that's going to be really brittle. And we have to think about where are we going to pull those resources from to do that project. And so it felt like I want to do that. But what we observed in real time was a challenge in how do they like really action on that in a way that feels attainable, that I can get this done because I want to get it done. Now, with the advent of AI and things like agentic workflows, you can create moments of information exchange and data exchange, which is really the end outcome that you want, and do so in a way that doesn't require a multi-quarter investment. It doesn't require them to say, I've got to go get a $2 million budget approval to get this project greenlit. You can do so quick. And what then happens is there's elements where you see proof points of what information exchange looks like and what does that unlock for their business. And then that helps the momentum of really thinking about what does this look like for me as an insurance company, as a brokerage firm, or any other sort of element in the ecosystem. So that's been a big part of what we've seen that has been working really well. The other element is how do we think about a way to really solve this like comprehensive problem of structuring unstructured document sets and data and information. All of the exchange that was email and document driven, a lot of those documents still exist. And part of what we've had to solve from an AI standpoint is how do I not just process that information, but do so in a way that actually drives the outcomes, that's the good outcomes for our customer. And so part of that is big, large language models are really good at things like synthesizing information and extracting segments or sections of a document. What they are not as performant on is how do I translate that in a way where an end user could compare an apples to apples outcome? Because one carrier would call it an apple and the other carrier would call it a banana, but that's actually the same thing. It's actually an apples to apples comparison.
How does that happen?
And so we then use our own internal data set to then normalize that information, because we know that carrier calls that thing a banana, but it's really normalized to be an apple. And so part of how we do it, and that's part of the vertical stack that we've built, is how do you then process information and then normalize it in a way that you could understand it quickly. If you didn't have any interest in knowing the how of that information came onto your screen.
Yep.
And for us, the really like that element on the AI front has been a huge unlock for us in terms of how do we think more natively about product development? What does that look like? How do we move things faster? What are the problems that we can solve now that are much more expanded as a result?
So what you just mentioned there, it's if there's like a term, like a specific insurance term that defines something, you're saying that some of the carriers define certain types of coverage or types of triggers or policy things, like those are all defined differently by different carriers.
Yep.
So they're not really normalized.
If you were to look at the plain language that would in a insurance policy or an insurance proposal for one carrier and then compare it to another carrier, the words would be different. And so what you need to do if you're trying to understand, well, which is better, is you need to be able to normalize that in a way where you can compare the two across.
Yep. And this is a broker. Like
this is a broker function that's doing.
Currently probably just they have maybe multiple monitors and they have PDFs open of all the policies, and they have a spreadsheet that they're going through and probably typing it into a spreadsheet most likely as they read through all these.
That's right.
Interesting. Okay.
And so it's important because if you're helping advise an employer to make a decision around what am I going to buy and offer my employees, these are meaningful things. And so it was, for us, something very nuanced about the insurance business and benefits in particular was, how do we approach this problem in a way that helps them? Actually, just giving you the raw information that's in the document in its current form is actually not that helpful, because I'm giving one version of the language and another version of the language. And so if I'm looking at both of these pieces, I can't compare it in the same way that I would want, right?
Yeah, you maybe saved them a control F or something of like, they found it quicker, but then they still have to do things with it. Yeah.
And so what you really need is to drive the value is to help move that into a way where they can compare it. And, across then the other 45, data attributes of that product, you've got a lot to get through. And then you times that by, maybe 10 insurance companies. The amount of information that you're trying to do as part of the analysis is pretty significant. And you've got, 5.5 products per employer on average that's offered by employer to. And so you just run the math, and like doing that at scale is really, really hard.
So if I want to basically send a proposal or send a package to a employer, just one, there's, to your point, it sounds like how many hours maybe typically goes into that current like manual process currently without using Threeflow?
Yeah, I mean, you're easily in the 50 plus hour per project.
So it's basically a week to just give a client some quotes on what they.
Yep. And so you think about if you think about like a regional brokerage firm, relatively, normal size, you're not part of a huge multi-billion-dollar public company conglomerate. You probably have 150 to 350 like employer clients that you're managing. So you think about, okay, so I'm doing that project, which is 1 week. I'm doing that across, let's say it's 300 clients that you have. And then
you got to do it once a year per client.
You have to do it once a year per client.
Okay.
And you're also then doing a bunch of the ongoing work as far as just like advising them on upcoming legislation and just doing the ongoing consulting work. And then the other bit, which makes it even more challenging for the brokerage community and carriers, is that the majority of the insurance policies renew on a January 1 cycle, which means that the time when this all happens is compressed.
Like Q4 probably,
It's Q4. Yeah. And so it's much like tax season for accountants, where it's as you get closer to April 15th, everybody is freaking out because you've got to get taxes filed.
Yeah.
It's much the same where 75, 80% of the policies renew January 1. And so all of that work gets compressed.
Yeah.
And so if you were to pick up the phone and call someone who works in a brokerage firm in October, you would hear a lot of like deep sighs when you ask them how they're doing.
Because it's starting to ramp up.
It's starting to ramp up. And they would just say like, I'm just trying to keep my head above water. And so the problem when you think about this, like on a macro level, is if all of the focus and work is doing that, you're doing this huge project just to review these like baseline details. Do you have the bandwidth to think about, well, maybe there's a different structure, a different plan design, a different product that this employer should consider?
Like self-insured.
Self-insured.
Yeah.
There's a bunch of work that goes into all these elements that is the actual advisory that sometimes doesn't get as much attention as everyone would like to have. And they do their best and a lot of them do a really nice job. But if you can unlock that, you think about how much of a better outcome that you could drive as a firm if you're not spending and burning all your time, doing these manufacturing elements, which are super important. They're like mission critical to the deliverable. But if that just was done for you in a way that didn't limit your ability to go consult on it, it didn't limit your ability to work with your supply side partners, it would be meaningful.
And you started the company not recently. Like this is not something where the LLMs were out, they were good, and like it all started working out. What was the original product kind of back when you started?
When we first started,
because was it 2016? Am I remembering right?
Yeah, and we really got things going into market, in 2017, 2018. The first, when we started the business, I started it with co-founder Rich Parrott, and then we got connected to our CTO and co-founder Shahib Roshan, and we had no product, and we were two guys that didn't have a tech background. We knew the business deeply.
Yeah.
And so we went and just met with everybody for a while and just made them write things out on whiteboards of like, how do you do it? No, like really tell me this part and this. And the first version of what we built was a very much a point solution. And it was very much a broker side solution only. So it didn't have any collaboration with carrier partners. You just can't build everything to start. And so we were like, well, let's just get something out and just get it started. We had to call friends in the business and just say, hey, I just need you to do me a favor and try this thing and let us know. It's going to be probably pretty terrible to start, but you understand the premise and like, that this can be better. And we're like on that hunt. And that helped to inform the first versions. And then, this was before we had the ability to leverage things like LLMs to process documents. And so you had to like really drive it forward through a lot of brute force in the first couple of years of getting a collection of brokers to start using it. And then one of the elements that was a big unlock for us was understanding how we can then start to use that volume of transaction in a way that we can engage with the supply side and the carrier side. And so for us, that was a big part that we did actually right when we pursued our seed round of financing in 2019. That was, okay, we can now turn on the carrier side. We can get them to enable, we can drive enough value, and then we can actually have them participate in the economics as well.
So is there some sort of like the broker sends a link or like the Threeflow input form that the carrier then sort of fills out in some way instead of just dumping their data, like their raw policy PDF that they might send? Yeah,
kind of. It was, the first version was we were like helping them build out the composition of like what they're delivering. And they were actually still emailing it.
Okay.
And then they were introducing the document back into our system in the very first version before the carrier.
Okay.
And so then we realized, well, if we allow for the delivery of the information to carriers to be organized in the right kind of way, carriers use phrases like in good order. Like, did you get it in good order, like inbound? So we can deliver.
The data's all been like processed in the right format and stuff.
You like have the basic components to underwrite that risk, right? You have the census file, you have the claims file, you have the policy documentation. And so that was part of like, how do we pull the carrier in? And then how do we build a workflow where they can have control over what is being delivered to the broker? So a big part of it was visibility and control initially for the carrier to say, hey, today you send over a document and you have no idea what the broker is going to then pull and put onto their deliverable to the employer. You now can control what they're seeing on screen as part of your offer to that employer.
Why is that a big deal? Maybe I don't know anything about the industry. Like, is that
There's a big deal of this element of nuance between carrier, whether it's a service offering or it's a contractual offering,
okay?
is a big part of how do you differentiate if you're one of 15 insurance companies trying to sell into a broker.
Okay.
You've got things that you believe really matter a lot. And so by giving that individual control, you have the opportunity to position that differently in the way that you want it to be positioned for the broker. And then you use that as an opportunity to then go and inform and educate that broker of why that matters and why your employer matters. So it's a big part of the sales cycle of why that control has an impact for you wanting to do that versus it doesn't really matter. Like it's going to be the same either way.
Oh, okay. That makes sense. And one thing I know, before you actually started, you took a pretty big vacation, sort of with your co-founder and your wives. Like, what did you kind of do before you officially started the company? And was this like in between all the research? You took a break and then you officially started?
We did the research after.
Oh, okay.
So Rich and I both worked for an insurance company, and I had been in that role for I think 13 years, and Rich I think 10 or 11. And so this was independent decisions. We both independently made decisions to get married. So we got married the same year. And then we wanted to take a break and have a beat and like take a breath, because this was the first job like out of school. And so we ended up doing 128 days, sort of walkabout style started in Scotland, ended in Turkey. And we were able to have fun moments of like connecting up with Rich and his wife, Julie, to, meet up for a week in Italy and hang out in Italy, and then like separate out again and then meet back up in Istanbul and do all sorts of fun stuff like that. And it was, one of those moments where there's a lot of reasons that you don't do that trip because you want to jump right into the thing. But I got to say, it's one of those where you reflect back on it in the value that it has for you just as a person and a human, and certainly something to share and celebrate with your wife is pretty great. And we reflect quite fondly about, and we wrote a terrible blog while we were, and
like a travel blog you wrote?
And we had, I think, 4 readers, mostly aunts were the readers.
Nice.
And there was one, my family is German, and the heritage goes back to a small little farming town in Northwest Germany.
Yep.
And I wrote a blog of us finding the family, because we had an address and that was it. And we just showed up to the farm and met my basically like 6th cousins, once removed.
Yep.
And spoke no English whatsoever. I speak no German.
How did you tell them, like, hey, I'm your 6th cousin once removed?
So we had gone to Bremerhaven, and Bremerhaven has this amazing emigration museum. And so we're actually able to find and track back when our family left. And so there was a family where 2 of the brothers left and the rest of the family stayed. And so like that's where the family tree. So we basically printed that off. And so I'm standing there, and I assumed that they would speak English.
Okay.
And so I was just like, hello. And
like, who's this random
they're just like
guy
looking
on our
at
farm?
me, right? They're looking at me, and I'm just standing there doing nothing helppful. And my wife, Jamie, she like takes the moment. So she puts her hands on my shoulders and she's like, Sachtjen. And everyone nods. And then she puts her hands on my shoulders and she's like, Sachtjen. And then everyone's like, oh, and I had like my driver's license, and I took my driver's license out. And then she smartly ran back to the car and grabbed the family tree that we had printed out and we had shared. So we had sort of figured it. We tripped our way into figuring it out.
Okay. Interesting.
But we wrote about that day, and it was pretty amazing.
That's a pretty cool story.
Yeah.
I feel like that's what I hear a lot with those. Like, we went to Europe to find our original family, and we just showed up to the farm or the village and like unannounced, and it was just a great time because they were like so excited to see us.
They are. It was so great. We were just
cool,
sharing cake and just sort of looking at pictures of our dog and kind of nodding. And then when we got back to the hotel, we were able to get a connection with one of our younger cousins and then use like a translate function at that point to like chat of like, I'm so sorry that was so awkward. She's like, no, it was great.
So it was like on the phone, like a translate app or whatever? Okay.
Yeah.
And they're pretty good now, like today in 2025. Like you can literally talk into it and it instantly translates to whatever language. Yeah.
That would have been a helpful
feature.
That would have been a helpful feature.
Your wife sounds awesome. Like that was a good move. So then I know that, so you started the company, things started to get going. I know it was like pretty challenging, right? When it started. How was the first couple months of the company?
We closed our seed financing in May of 2019.
Yep.
And then on July 10th of 2019, my wife was diagnosed with triple negative breast cancer, which is a very aggressive form of breast cancer that has, unfortunately very low survival rate, and it's not a good outcome. And so we sort of had that moment where this happened, when we think about the context of the business, at the worst time possible. We had at that point 2 kids. Our son Crosby was not even a year old at that point. And so all of these things were like culminating together in this moment of trying to get a business rolling,
get your family
have
off
2
the
young
ground,
kids, and have a wife who's a superhero, like going through this. And one of the things that I always kind of reflect on in these moments is like when people say like resiliency is real, but it can be a forcing function based on what's happening in your life. It's true. You just like, you put your head down and you just grind through it together with those that you like trust and have that relationship developed and built. And I think that was the thing that it both clarifies what's important in life, but also it makes it very clear about where are the real relationships that you have and those that really got your back. It's very easy to say that when things are going great, really good, and it's really easy to talk about how you support someone when it's like everything's rolling. It's when the shit hits the fan, like that's when stuff gets real. And it was a really, really hard year. She had basically north of I think it was 16 rounds of chemo.
Wow.
She had 3 surgeries. She had 25 sessions of radiation. It was terrible, for a full year. And then the anxiety of like not knowing how, things were going to end out. And then also trying to figure out a way that you like separate that in your brain to get a job done when we were trying to like recruit and hire teams. And like, it was crazy. But I think it was one of those things where, for anyone that's kind of going through a similar journey of people are all have their own version of like, what is that moment of challenge in their life? And and for me, what was the thing that I'm so deeply appreciative now in looking back is just like the support structure that you build with the relationships you have and the way that matters so deeply and how your tribe is like your energy as you get through it. And we had an amazing support system, and our investors and our my co-founders were like just couldn't have been better humans in that moment. And it's like you actually separate the business out for a moment to just be like, what do you need in that? And those are the people that like I will forever be appreciative of it. And I think it's when people talk about relationships over 40 years and 50 years, it's that kind of stuff that persists through in a way that is real. And, now my wife had a really good response to treatment. She just hit her 5-year sort of cancer-free moment, which is a really, really big moment in terms of, where she's at in terms of her journey. But yeah, it was very hard doing all of those things all at the same time and just figuring out like, how do you get through it? But something that, I try to be mindful of, in ways in which, people can be open about the stuff that they're dealing with and not have it somehow limit their ability to, perform in a job or a function. You can be open about all that stuff and still do those other things as well.
I mean, and it's just a big mental, I don't know if load is the right word, but mental, and I don't know if distraction is the right word either, because it's not a distraction. You should be focused on those things, but it's like an entirely new thing that it's like a whole nother job.
Yeah.
Like it probably should be a full-time job of caring for your wife that has cancer.
Totally. I mean, I think it's okay to say that it's, for a minute, like in that moment, it is a distraction, and not in the way that it's dismissive of like, that's the more important bit.
Yeah.
But it is really hard to figure out how do you navigate through both? How do you be present for your family and then also acknowledge that there is a real life element where we have to keep like moving this business forward? And that does take real toll on you, and you're just oftentimes physically exhausted from it of it can't go any harder on this.
Yeah.
But it's real, it's something that you had to be really intentional about to try to figure out, how do I separate these bits and just give myself a minute to focus? And I think that's part of how the support comes into play too, of like when I was off on focusing on family stuff, everyone knew that was like the focus, and having that separation was really important.
So how do you do that? Like if I'm a group of co-founders, we maybe we're going through a similar situation where one founder needs to really focus on something outside of the business. They're still committed, but like it's something like this, like a family member, wife, partner has cancer.
Yeah.
Was there like a certain process that you guys went through, or like a structure of doing it, conversations? Like how do you even bring that up to like everyone?
As we reflect on kind of how we focused on it, I think one part was being really clear about areas of focus was helpful. And so I knew that, okay, this is the thing that when I can really be intentional about focusing on. And the second was, we were pretty open about the communications on a very fast cadence. And they knew what was happening, and because it would change, week over week as far as how much I could focus on this versus that.
Because she might go through a period where she's feeling really good, and maybe you're like working from home in the kitchen with her or whatever, or like she's on the couch and you're on a table beside working or whatever, and you can be a little fluid with it. Yeah,
that's right. And so I think that I don't think there's a magic in it. I don't think there's like a beautiful process that you do. I think making sure that you're like really open and honest about like what are the needs in that moment. And I think being really clear about the areas of focus, those are the two bits that are critical. And if you can do that well, then I think there's an area where like if you were, in this moment and you're trying to support a co-founder that's going through it, helping be intentional to tell them, I got this bit. And like remove that mental load from them and just have them focus on maybe an area that they're really, really good at intentionally, and just say like all this other shit, like we got it, like we'll take care of it. I know that previously you were doing these things, but like we'll take that, but we need you to do this bit. Maybe it's a technical co-founder and I just need you to be focused on these things when you can. That's helpful too, in terms of the clarity.
So like limit the scope of what you're doing. Just focus this thing that like, when you make your co-founding team, you're like, we're all good at these things. Just the things that you know you're good at, just do those.
Which you should probably do anyways. But I think being even more critical and even more disciplined about like, what's the most narrow thing that I can have this person, focused on in that moment, I think is really helpful.
And then you mentioned, so the fundraise, I know, so Rick Zullo, who introduced us, I think was your first investor, big, like led the seed round.
Yep.
How did the fundraise go? Like meeting him, convincing him to invest, or him convincing you to let him invest? Like, what was that whole process? Because I know it's like, it was a non-traditional situation that went down there.
Totally. I mean, I think first off, I didn't know what I was doing at all.
Like, did you know you wanted to fundraise, or?
We knew that we needed to raise some money. Okay. We had previously done a friends and family kind of round. And so it was the classic pass the hat. And we felt good about all of those that contributed in the friends and family were all insurance people. So brokers and carriers that like felt this problem. So that was like, we liked that bit, but there was
just after you'd done some of your like customer discovery conversations.
That's right. That's
so
right.
People were like, oh, these guys seem like they know
what they're doing,
what we want, and maybe they'll make it.
I mean, a lot of them we had personal relationships with. So they're like, look, if I'm going to make a bet on a team, I'm going to make a bet on Rich and Ryan, and I'm going to give you guys 25 grand or whatever the number was.
Yep.
And so we got to a point where we knew that we needed to put a little bit more gas in the tank.
Was it like to hire some people to help
teams? And we had been working with, like classic like contractors and like just being scrappy. We didn't have anyone like actually on staff. And so I got introduced to Rick through another sort of friend in Chicago. And at that time when we first met, we were not actively fundraising.
Okay.
It was we were starting to think about it, but not an intentional, like, I'm going to run a process. I didn't even know what that phrase, like, I didn't know that was the thing of like, here's how it goes and here's the process you ran. And so Rick and I had an opportunity to meet each other and ended up setting up time together on like a monthly cadence where we would riff on marketplace dynamics. It's something I've always found to be fascinating, whether it's insurance or other industries, of just how do marketplaces work? What are the dynamics of it? What are the levers and motivators? And so we found ourselves talking about that and then applying it to the big thing that we were thinking about, which was introducing the carrier side into our product and then incorporating that into the economics of the business.
So the product that was the pure broker product was kind of there.
It was there.
When you started fundraising.
Yeah.
Okay.
And so the thing that we were, at that time, our revenue was exclusively from the broker side. So
just
they
like
were paying us
like
like
a
SaaS
fee.
Yeah.
Okay.
And so it was relatively uninteresting. And we knew that we wanted to flip this to be supply side funded eventually, but we had not done that. Okay. So a lot of the discussion that we had was about how do we want to do that? What does that look like? What are the levers that we need? Like, how could we, do that across like a handful of carriers and be successful there? And I think what that allowed for Rick and I to do is, one, establish a relationship and level of trust pretty early. And then what I actually didn't really know at the time was all of the work that he was doing to get Equal like spun up and get the fund like in place and raised.
So you just thought he was some like VC billionaire guy who was just like going to give you some money and you'd be off to the races?
Well, I knew that they were starting a fund. I didn't know the exact composition of like what was happening about them closing on that fund at the time.
Okay.
And then I learned that later, sort of in the process, where they, at the same time that we were doing our fundraise. So now at this point, we're actively talking to venture investors, Equal and others. And then that's when he had shared that they were actively like working to get their fund closed. And so there was this moment where we were both very dependent on each other in terms of, I'm looking to you, to obviously help fund the business. And he, as part of like getting the fund closed, of course, is talking about their ability to go find deal flow and all of that stuff.
Yep.
And even though we did get to the point where we had 3 other term sheets that we were looking at other than Rick and Equal. And at that point, it was a pretty easy decision of like who we wanted to partner with, even though there were others that had slightly different deal terms and things like that. And so I think what that allowed for us to do is have trust that there are these other options, and like we're like choosing intentionally to be partners together. And I think it established this like openness and honesty that we've had ever since of just, hey, here's what's up over here. Here's what I'm dealing with. I know that you've got like your stuff that you're chasing down.
Yeah.
I think we can go farther together. And I think that was sort of one of the foundational pieces of it. And he then introduced us into Joe Floyd, who's at Merchants Capital. They ended up leading our A. And so it helped then us establish the relationship with Joe and team. And part of the, we never really ran a super formal process all the way through, as it just sort of helped like drive business forward and establishing the capital partners that could help support the growth of the business.
And I think Rick mentioned that you were kind of like helping him. You talked to his LPs and they were like using you to kind of diligence Rick.
Yeah.
So and you were probably like, "Let's go, guys! Like, give Rick the money. I want some money. Give it to him so I can."
Yeah. It was. There was a fun dynamic, but yeah, it was. But part of the deal, when it's kind of like it's a deep partnership. When you're thinking about a venture investor, it's a proposition that has a long tail on it in terms of timeline. And I don't know, maybe it's a reflection on stuff that happened with me personally and things like that, but like that just matters so much to me. And I know with Shahib and Rich, my co-founders, like it matters so much to them as well. And being intentional about that and how you would choose especially at the seed stage, someone who you want, like, that you're going to be working with for a long time, like just reflect on that because it really matters. And there are some firms that, I don't think approach it in a similar kind of way. And it's a little bit more transactional, and that's okay. It's okay. But just know what you're getting into in terms of that decision. And for us, the right call was, making sure that we had someone that we could develop that relationship with and build on over time.
If I'm listening to you and you say that, and like that really like popped for me, I was like, oh yeah, I should think about this as a long-term relationship.
Yeah.
Are there any sort of red flags or green flags that someone should keep top of mind when they're meeting investors and thinking about like, do I think this person might be a good longer term person? I'm not really sure what's the best way to kind of tee up, but I hope you get what I'm kind of saying here. But like, what are some things that I should maybe be thinking about?
So I think for us, one of the things that I found was alignment in the investor to you individually, but also the business that you're building. And so for us, we're in the employee benefit insurance industry. It's an area that most people don't know much about.
Yeah, I don't think I've read any VC blog posts about it except from Rick.
Yeah, that's right.
Oh, there you go.
That's right. And so one of the things that I observed really quickly for me, which was personally a bit of a yellow flag, red flag for us, was it meant that more generalist investors were less of a good fit. And so I think the green flag and red flag is not my green flag is going to be someone else's green flag or red flag. It's like establishing what is that for you. And for us, being intentional about those that had more of a vertical focus. So then whether it was then Emergence Capital or then Excel, they were very specific in they had exposure to either the business that we were building, so a vertical business in terms of Emergence's use case, or a thesis driven like Rick's was in insurance. For us, that allowed for me to move faster because it didn't mean that every time I talk to you, I have to spend the first 30 minutes catching you up.
Like we just did. Like, you explained to me how the industry works.
Now talk about it like a decision that we have to make. And if you just think about like, what do you try to optimize for? It's like tempo. I'm all about tempo. Okay. That's a big part for us that was really important. And there's a bunch of amazing investors out there, but for Threeflow and for me, someone that was more of a generalist model didn't fit as well.
Yeah.
There's others that actually would really appreciate that because maybe they do like the pattern matching in more of like a horizontal generalist kind of model.
Yeah.
And so I think that's a big part of it. The other part to me and to us was just about the authenticity of that person. And it just, our quotient on that's really high just matters to us. And I think especially when you get into those challenging, whether it's a challenging board meeting or challenging quarter or challenging year, or whatever it is, it's going to happen. And knowing that you can actually work with that person and not have to kind of like dance around it in a way where you can't just be open about what's up so you can dig into it and try to help solve the problem is really important. And I think I was with some other founders this week for this insurance summit event. We were reflecting on it's a lot of times we observe it, and probably myself too, of like first time founders, especially if you're a little bit younger, the dynamic between you and like your venture investor, it has a like, you're my boss kind of dynamic to it.
Yeah.
And it breeds this moment like I've got to spin everything to you to make you feel like everything's great. And that is actually the worst thing that you can do, because then they have a perception that things are all great, even though you go away. And now you feel shitty. You've got this like mental load of like, ugh, I don't. And so then now you're in this pathway that doesn't drive forward like what has to happen, which is we got to figure out this thing and we got to try to move it forward. And I think one of the things that I've reflected on is like I've matured in trying to figure out how to, do this well and try to operate and run a business is the more that you can just like be open about that stuff, because everyone's invested in the success of the business, literally invested in the success of the business, and doing that in a way that is collaborative is really important. And making sure that you feel like that fit is something you see in that seed investor and that A round investor is really important, because it's going to happen and you want to be able to work through those things. And the personality type that maybe I would resonate with might be different than you. And that's okay. It's kind of like whatever you think fits for you, making sure that that's true is important. You've got this marketplace model and you have a scenario where you've got a multi-billion-dollar Fortune 200, Fortune 250 insurance company.
Yep.
And then you have, generally speaking, a relatively small, maybe $20 to $50 million revenue business as a professional services company. And so you would assume that the leverage and dynamics wildly favors the insurance carrier.
Yeah, that's what I would think.
And it is not the case. It is not the case.
Okay.
And so part of it is, why is that true? And it is largely because the way that these insurance companies are sales companies that just happen to also do insurance, right? They're distribution companies. And when all of the distribution is controlled through this relatively small broker organization to access all of these employers, there is this choke point that they have. And brokers have done a very good job of using effectively. It's also very competitive in that pick a product, there's 10 to 15 competitors that are good, solid competitors as an insurance carrier that you're competing against.
Mm-hmm.
And so this market is unique in that the smaller entity actually has more leverage and power. And so
it's very rare.
It's very rare. And so then it breeds these weird idiosyncrasies of the dynamics that were important for us to understand, that we knew because we had experience in the business, but when we're trying to catch folks up on, hey, this is how it works.
Yeah.
It's always that doesn't make any sense. Why wouldn't they just lever this layer and channel in a way to make it work better for them?
Yeah, just go to the carriers, cut some costs, make a bunch of money as the interim, become the new middleman or whatever, the whole vertical SaaS marketplace playbook.
Yeah.
So you mentioned something earlier though about you had a big conversation with Rick about how do you build a marketplace? How do you get them off the ground, kick things off? You mentioned earlier you had this broker kind of vertical SaaS product initially built, and you're like, okay, we got to figure out how do we get the carriers on board, have the supply side start to monetize that. So how did you just approach that? And I just kind of want to talk a little bit more about how did you get that going?
Yeah. So I think how we approached it was, one bit, we had the domain knowledge to know that there were examples where there had previously been intermediaries that had participated in the transaction paid for by the supply side. So intermediaries are like a general agency, which is like a broker's broker.
It's a broker for brokers.
It's a broker for brokers.
Okay.
Yeah.
Okay. Wow.
And so there is it's kind of like a little cottage industry, but the reason that it matters is that it illustrated that there is an opportunity for you to build value. In this case, the broker's broker is more about aggregating broker demand. Okay. If you imagine there's a bunch of smaller ones, and I, as an insurance company, don't want to spend money in salespeople, being on the ground and going to
Midwest, middle of Iowa,
or where you have pick the state.
Yep.
And so we saw that firsthand from being on the insurance carrier side. So I knew that was a possible lane. The thing that we also knew is that what needed to be true for us to cut anything that is a commercial contract with an insurance company, we needed to have usage and volume on the demand side. You can't just go with no volume, anything to an insurance company and say, hey, I'm thinking about this idea.
Yeah.
They're going to ask me the natural question, which is who are you? Who do you work with?
Yeah.
I will say nobody. And they will say, come back later.
Yeah.
Right.
Give me $1 billion in premium and maybe we can I'll return your email.
Yeah.
Maybe.
The other thing that we knew from our experience was, while these insurance companies are large in aggregate across the country, the way that they organize themselves, it's very regionally based, which means that if you think about, at that time we were in Chicago, and if you think about the Chicago or Midwest market, and you think about the motivations of the insurance company, in particular the distribution leadership, you don't need a ton of brokers on the demand side to feel like you can have impact with that distribution leader.
So how so?
Meaning, if I go get 4 or 5 brokers in the Chicago area, and you are the sales leader for an insurance company in Chicago, you need those 5 brokers in order to hit your sales goal. And you know that you need them. So what I can do, what we are able to do is use them to become the champions internally within the insurance carrier to say, hey, we need to figure out a way to work with this new company that's starting. And the reason why is because they're working with like some of my major like trading partners in that market.
Okay.
And for us, we were able to use that as a really important kind of like beachhead or wedge into how do we create a both commercial and operating contract with an insurance carrier so that we could then start in having them use the thing, which is really important. So we had the operational component. And then how do we put together commercial terms that allow for us to monetize on the supply side? And so we had to understand the depth of the like how these markets play in a very like micro market kind of basis, and then use that as a way, you know, to expand across the country for the insurance company. And then by extension, you can expand it across the country on the demand side.
So you basically went to, so this is actually what you did. You went to Chicago, you got you got enough broker volume to where a carrier would say, all right, this is just worth the time to work with these guys because we know that the ROI is going to be there. We're going to do whatever dollar amount in premium and then revenue, profitability, whatever, make them so they hit their targets. Maybe they hit their quota, they get a bonus or whatever. And you use that to kind of force them basically, or make it worth their time to do it.
Yeah, make it worth their time. And I think then for us, the key when you're approaching a market as big as the insurance market is, you have to be really intentional about the entry points and you have to make sure that's helpful for all the key stakeholders. And then you have to be able to extrapolate off of that from there. And the other bit that we noticed when we started the business too was historically people would ask the question around what like insurance products are we starting with first?
Yeah. And you started with some pretty small products. Like, I mean, the way you just described that, you got to get big enough to me. I would have thought just pick the biggest one and just bring that to them. But you didn't do that.
We didn't do that. We actually started on the non-medical side in sort of what's referred to as like the ancillary business. And
So what is that?
Life insurance, like long-term disability insurance, short-term disability insurance, things that are in more of the protection products versus the like medical insurance products. So again, life and disability are the major, like the two components that are generally offered probably 80-90% of the time by employers. So they're very commonly offered. And this actually goes back to the discovery conversations that we had with brokers in understanding where did they have the biggest frustration that didn't correlate to the biggest revenue value to their business. And so these products, even though their premiums are smaller, which meant that as a broker, you make less money on these products, it actually was requiring a lot of time. And so it was like disproportionate to the amount of money that they made. And so they kept on saying, my like ancillary process is so terrible.
Like but you needed to have them.
And you need
because
it.
most customers
because because it's expected, it's part of like the core deliverable. So we knew that kind of in our belly, and then we confirmed it when we were going through the discovery motion before we built anything. So those are the products we started with. We then used that to like drive the volume because we knew we could go to enough brokers and say, hey, I know that you hate doing this process for this cohort of products. So we'll solve that for you to be able to drive volume such that I can then go, what we were talking about in the market, try to establish the carrier side and then expand that across the country. And then for us, that was the way in which you can build the market across that particular product. And then for us, it was how do we then add additional insurance products to the portfolio on platform? And then how do we map that to the carriers that we have? And so, things that we launched after the life and disability were things like dental and vision. And so
are those pretty common too?
Pretty common as well.
Okay.
And so the other bit was that mapped to the insurance companies that we already had relationships with. Many of those are the same companies that also offer dental vision.
So then on the business side, that just makes each customer becomes a bigger contract value.
That's right.
Margins improve because you're just getting more revenue from existing customers.
That's right. And so for us, that was a big part of now, because you have this natural cold start problem whenever you're building a marketplace. And the fundamental question is, well, how do you solve for that?
Yeah.
And for us, it was finding that lane of like solving a really core problem for the demand side in such a way that you can then use that to be a fundamental entry point for starting to build demand side and then introduce supply side. And ultimately what we observe is we have a marketplace where it's a opposite side network effect, meaning if you're a broker, you do not care if another broker is on our platform. You care if N plus one carrier is, because that's just one more carrier that you can work with. If you're a carrier, you actually don't want more carriers on platform. You actually prefer it to be less. But what you want is you want N plus one broker, because you want more brokers to sell into. And so our opportunity, once you get this going, is how do we add like more on both sides in a way that still drives value to both stakeholders. And that's been a key part of how we've grown the business in terms of new broker customers, new carrier customers, and then new products that we're supporting as we've been growing. So
then when you mentioned growing, getting pretty big, what's the current state of the business? I don't know what you're open to publicly saying, but just I know you've raised a Series B from Excel. I'm assuming that there's probably something good that's going on if you've gotten to that point in the business. Like, what are you kind of sharing publicly?
Yeah, I mean, I think one of the key top level metrics that we talk a lot about is sort of like premium under management on platform and how we think about that. And we're well into the middle of the $2 billion range now. We'll be $3 billion by the end of the year. And, we think about that over the context of both the number of broker clients that we have. We're north of 330 broker locations across the country, got, north of 70 carrier relationships on the carrier side. And so for us, like the premium transacted on platform is a really key element to like, what are the success metrics of the business? Our team is just under 140. And so we've got a good crew that's distributed across the country.
And then when you talk about building a marketplace, I think the big thing, like a big risk is like off platform, like people transacting off platform.
Yep.
You could, in theory, if everyone is already emailing each other manual stuff, like, is there any chance that, your carrier just emails the broker? Like, how do you make sure that everything's happening on the Threeflow platform and you're able to actually monetize it?
Yeah, it definitely happens, right?
Oh, really? Okay.
Yeah, and there, some of it can be unintended where it's just, I'm a carrier and I'm just emailing. Renewal is a good example where these policies have defined contract terms. And then there is a renewal that's going to come up that is here's your next price, whether it's 12 months or 24 months. If maybe you work in the home office of a particular carrier and this is the underlying broker, you might just email that renewal to broker that's operating on Threeflow. And so that would be an example of just like an unintentional off-platform sort of like transaction. What should happen is we want that to all obviously happen on platform.
You could probably do an alert of something like the renewals coming up.
That's right. And so we've built a bunch of it is building workflows to be able to support what happens today. So an example for the renewal is there are times that the carrier wants to release it. So we need to build work streams that allow for that to be really easy for the carrier. Sometimes there are times where the broker wants to request it. So how do we allow for them to configure that on platform so it automatically requests to the carrier and they can get it based on their own time horizon. The other bit that has been really exciting about the advancement on the AI front is its performance in doing things like email ingestion and document ingestion. So we can then share with our customers, look, if it starts off platform because of that example, carrier just emails it, no problem. Here's an easy way that you pull it onto platform by introducing it through a very simple email box distribution. On the back end, we've got like the technical problem to solve, but well, how do you do that? Like, how do you make sure that you're processing those emails? You're pulling out the document, then you're processing the document, you're extracting the information within the document, and then you're normalizing in the way that we talked about before. So we definitely think a lot about it because we want to make sure that there is just a wild value differential for both carriers and brokers.
Wild value to use Threeflow.
It's better, right? Okay. It's just like they get a better outcome for a whole host of reasons if things are happening on platform versus not. But it's an analog industry. I mean, that is how it's operated for a long time. And so Sometimes if we enter a new market where we historically didn't have a ton of penetration, there's like an education, like change curve that you've got to take that market through to show, hey, this is actually how it's better. And you're going to have the natural motions of a change curve that are going to take place even in that market, that we have to make sure that we're mindful of.
So it sounds like the benefit for brokers is the 50-hour a week process that we talked about for renewal, automate it all. Maybe I'm exaggerating this a little bit, but like press a button, you get all the quotes. It's something you can present to your client instantly or within a couple minutes, or maybe it's like a couple days later because you have to wait for replies. But cut 50 hours down to, we'll say, 5 minutes. What's the cut on like time saved?
It probably goes from 50 down to you're doing like the 5 hours, but it's the analysis hours, right?
Okay. So you're just like looking at all the quotes and looking at what the coverage could look like and maybe any recommendations to your client.
That's
stuff
right.
like that. Okay.
That's right. You're developing your recommendations effectively.
And then the benefit to the carriers is this more broker discovery. There's more brokers you can distribute through if you come on.
I think there is an element of that. So there's a carrot of like new growth. I think there's also an opportunity for the industry, especially on the carrier side, has had like a connectivity and a workflow problem. And so if we think about, we've got a relationship with a big insurance company where the delivery of our inbound, so broker requests this carrier to quote, we drop it programmatically into their underwriting system. And then that broker doesn't have to spend a bunch of time, or that carrier doesn't have to spend a bunch of time in receiving an email from broker and then going through a bunch of manual motions to enter that data into their underwriting system so that they can develop a price for it and then respond back. So a big part of what we do is we built the connectivity so that I can deliver that inbound into your quoting and rating system. You then can run that motion and then now programmatically deliver this back to the broker through our platform. And so there's a distribution element to it. There's also this operational element to it. And then there's a big part of an error removal that is really important as well, because when you've got humans rekeying and doing all these things,
someone might fat finger that
happens all the time.
Messes up the coverage in a bad way for you as a carrier.
It happens all the time. And typically as the carrier, and I knew this from my own experience, it is on you to figure out how to clean it up. And those are the like out of contract claim approvals that happen that every carrier knows is a thing that takes place. And what we believe is by building the pipes into the carriers and then ultimately piping that back into the brokers, we can help remove that element and also allow for them to just focus on the bits that matter more, which is, as a carrier, your job is to sell into the broker and explain to them why these products or these plan designs fit this employer better. So go do that better. Go be more efficient on that. Improve your close ratios. Spend less time on just the manufacturing in a similar way. The other bit for both sides that's exciting is historically, when you've got an analog process, there is no data or information or analytics that shares like what's happening in real time. So a big part of what we do is we organize all that information and data. And then we have two shared dashboards that carriers consume and brokers consume that talk about what's happening in the market, whether it's for me as the broker or it's for me as the carrier.
Interesting.
And organizing that data and putting it into the hands of those stakeholders is really critical because they've never had it either like at that moment in time, or they've never had that full picture of resolution for like what's happening in market. And if you're a carrier, you've historically known opportunities that you've received. You know how many you've sold of those opportunities and some outcomes there. But what you don't have is the denominator in that. You don't have, well, what didn't I see and why didn't I see it? Or when I'm losing business, why am I losing business? Am I losing business for a rate differential of X or Y? So things that we can organize for the carrier and also allow for them to manage their relationships on the broker side, and then the same in a different kind of flavor for the broker. So how we pull this information together, because once you automate the work streams and bring them onto a platform system, you get that as a big unlock. And that's been exciting to see like how we've continued to iterate on what that looks like in market, because if we think about like what's the opportunity, it's not only looking at what has happened, it's starting to use this to build out sort of the intelligence layer of our business to help brokers be more predictive in, well, which insurance company should I consider? Helping carriers be more thoughtful around where am I winning disproportionately in markets and be able to do that in faster turns. And it really opens up a new, like, what's possible opportunity with, carriers on product development, what that looks like, and, how they manage that over time.
Yeah. So for like a carrier, the insights might be that, hey, a lot of companies are now starting to buy childcare
Totally.
benefits or coverage. I'm not sure what the product might look like, but
That's right.
they might have them because they don't have anything there.
That's right.
So they don't even know it exists, and they might know that it's coming up. And then maybe for a broker, they might see like, oh, carriers are now starting to underwrite using social media history to underwrite the products. And it like this specific carrier has lower rates in this category because of this new underwriting method that they're using. Like, is that all true? Or
yeah, I mean, I think those are examples that certainly could be, you've got a bunch of these scenarios of, what would be the most helpful information that you could give to a broker at the time when they're going through this process? One of them actually could be if you had information to know that, let's say you got a renewal from your medical carrier, your dental carrier, and you were able to actually get a high level of confidence check that those renewals are actually still well below market in terms of the price.
Because you see everything else that's happening in the market.
Because you see what else is happening. Is there the value that you may have of just actually avoiding the process altogether? Because the utility of that is, I'm going to go check the market to see if there's maybe a better price or plan. If you know that customer is super happy with their providers on the carrier side, there's not like real motivation at the employer level to like change insurance companies because there's disruption for employees and things like that change. How that's a moment where you could actually avoid the process like in full altogether, but still drive the outcome for the employer. So there's these moments where thinking about how do you get more predictive in using the information really like drives a lot of potential behavior change, because this is an industry where, like when I was at Sun, I think the number was they processed something like 145 to 200,000 inbound RFPs per year
from brokers,
and then a ton of manual cost into that, which is leading into like higher expenses within their premiums.
Yep.
And they're closing historically at like a 5 to 8% close ratio.
Oh, wow. Okay.
And so really low close rate. And they are spending all of this time and money to try to like acquire these products. And like a lot of it is just you're turning and like churning and burning through these systems, and it doesn't drive a lot of value.
Yeah, I can definitely see. I guess I can see there how like the benefits to both sides. One of the things you mentioned was that you've learned that carrier volume is so important. So it'd be like supply side volume is just so important in a marketplace. Maybe that's obvious to some people, might not be obvious to others, but why is it so important?
What we found was, when you think about trading partners together and their motivations, a key part of the supply side is obviously the understanding and anticipation of what the volume would be if they are working on like in a marketplace or in a network. One of the things that we learned quite quickly was when we were first starting the business and we were still in our infancy in terms of broker demand, we had a friend who ran the sales organization for a large insurance company.
Okay.
And so we had basically asked for a favor to like get us a big meet with their senior leadership, technology leadership, et cetera. So we went to their home office, and it was myself and my co-founders, and we had put together this like, here's what can be. Like, I'm going to vision cast, like this is where this is all going.
Yep.
And much of it is the same as it is today, but it was talking about like, what does connectivity mean? How does that deliver value to them as the carrier? What does the analytics look like? How they can think about all of these things that help improve their business in a meaningful way. And so we went up there, and there were probably 10, 12 people in the meeting, and everyone is in. They're like, body language is good. They're like leaning in, and we got them at that moment.
Yeah.
And then at the very end, their senior, I think it was their CIO or CTO, asked a very valid question, which was, so who are you working with on the broker side? And at that time we had 2.
Okay.
And we were like we're trying to sell the third.
And you were trying to close them, or
the third broker.
Oh, the third broker. Okay.
And so like, I'm trying to pitch them this idea of like an integration project. And it was going to be like a pretty significant deal. It's non-trivial for this insurance company to engage. And we had them there. And then they asked the volume question. And then, of course, we had to share that, well, we've got 2 or about 3. And at that time, it was like $20 million of premium volumes, like nothing.
Yeah.
And that was the moment. Watching everyone's face change in that moment was the confirmation, at least within our space, of how much volume matters. Because if that question would have been asked in that moment, back when we were starting the business, and imagine that we had the network that we had today, it would have moved forward immediately in that moment as far as the integration and like the way the partnership would have developed with that particular insurance company. But that was also the moment, because volume matters, and matters almost exclusively, where we knew that that should be true. And we've seen those moments, here, especially as you're building any marketplace, of just your enterprise value, with the value that you can deliver to customers, is like a lot of times really, really tightly coupled in the size of the network, the size of the volume. You look at network businesses that have gotten to a point of critical mass, and they've achieved that, where now I can just drive a ton of value because I know that there's captivity on both sides.
So did you then strategically find smaller carriers that it was your 20 billion or 20 million or 30 million in volume was big enough for? Like, how'd you ladder up?
Yeah. So I think what we had to figure out was we could still cut commercial terms with that carrier. We just weren't going to be in a position to establish an integration project. We were like pitching them this like API integration idea.
Got it. Okay.
So we had to start with the commercial terms and build up into a larger volume base as a premium for that carrier, so that they could say, oh, this is now a $200 million like premium opportunity project versus a $20 million opportunity. So we focused really intentionally on, okay, we're not going to be successful in trying to pitch these larger scale integration projects right now, because we don't have enough volume to matter. As we build that up, then we will, and then we will go do that. And now that same carrier we are integrated with, and like we have achieved that outcome.
Okay.
And so that was a big bit of what we focused on, was what is something that you can pull forward now, and doing that in a way where that was commercial terms, and we could do that pretty quickly.
Okay. And this is a little bit of a different topic, but I wanted to ask you about this. We should include it in the fundraising section. Rick told me that you fundraised without a deck. Is that true, or was that just the first round that you did?
I mean, I will say that we have never run a formal process to date. And so have there been times that we put together a deck to like outline the business? Yeah, we did. We had to do a partners meeting with Emergence and things like that. Okay. But we never, in its traditional sense, I have a deck, I've got my data room, and like off we go. We still to this day have not. We've been fortunate enough to grow the business and had early opportunities to build relationships with investors who then like made a move, to invest in Threeflow. And so we have avoided that process in terms of running something that's formal, and I'm going to run it for 12 weeks and I'm going to go through and meet with everyone. And I think that's been advantageous for us in that it ejects you out of the business for some period of time. And obviously that's a reality for a lot of founders and a lot of companies. But we've been able to, again, be fortunate enough to work with early, Rick and Joe, early stage sort of investors, and their relationships with downstream investors also was really helpful. And that allowed for us to start the conversations with companies before we were raising, and just share with them the business and get them introduced to the business in a way where they were comfortable in that as an opportunity. And that then afforded us, a way to then have the conversation around, their participation, on the cap table.
And so then what if some of the best hires that you've made kind of look like?
I think, we were reflecting on this recently about like the composition of who are the stars on the team. And I think there's this continuous pattern matching that we see, which is this combination of critical thinking and problem solving. Okay. That when we think about who's like, whether it's in the EPD org, which is our engineering and product design organization, or it's our revenue org, and you look at who are the star performers, whether it's an IC, it's a line level manager, it's a director, or it's an executive, it's those that have a world-class talent level of critical thinking and proactive problem solving sort of behaviors and motions. I was watching this interview with former President Obama, and he had said something similar of like, just get stuff done.
That's great. Yeah.
Just get like, and it sounds so simple, but it's so true of what you want just desperately is when someone's like, I got it. And you have confidence that they will take it and deliver the outcomes that you need.
Yeah.
And it sounds like
The most simple way
like,
of
of course
defining
that's
it,
true. But if you're really intentional about, if I'm participating in an interview process, I spend a lot of my time trying to probe in for, tell me more about yourself, and then giving me an opportunity to learn about times where that has shown up for them professionally. And if it's there, it jumps off the page because they've got all of these different examples of how that's pulling them into these other projects. And you can have someone who's really good at breaking down and like naming why this problem is a problem, but it has to be coupled with this like mindset of just moving proactively to solve a problem and not waiting to then get the permission or the direction of like how to go solve that problem. Because even at our stage, we're still figuring out a bunch of stuff as we're going into new segments. And what you want disproportionately is those that can solve for problems, and also this idea of hiring for slope, those that are just moving up and accelerating and growing at a disproportionately fast pace. And I'd rather have that individual who maybe doesn't have the same amount of experience, but has the demonstration of the critical thinking, problem solving, and the slope, that over someone that maybe has a ton of experience on this particular area. And especially right now with, the acceleration on the AI front, it's not like there's people that have all of this experience. People that are really good engineers are just like figuring this out on the fly because they're interested in it. And so then that breeds, their ability to understand something and then leverage it, to move even faster, which is super exciting. I think a big unlock for those that are trying to, figure out what they want to do and what gives them joy in their own career is, just finding those areas of solving problems and getting stuff done is so tremendously valuable. And part of, again, what we look for, and part of when we look at who are the stars within our team and our org, it's that. You're like, oh, awesome. You just like took it.
And so with a lot of the AI stuff that you're doing, it's a lot of like ingestion and summarizing and like spitting the right information back. Like it's a lot of those types of problems with LLMs that you're solving right now.
Yeah, it's a lot. I mean, structuring document sets is like our really first core like use case. We do that across like quote proposal documents. We do that across policy documents. We're launching a medical product here soon, and that's a big part of the unlock for us too.
This is like health insurance?
Yeah, so previously we were supporting the self-funded medical, and we're introducing this year fully insured medical for all market segments. And one of the things that we needed to do there was we had to figure out ways to process documents at scale across something called an SBC, which is basically a review of coverage that you have on the health insurance side, as well as a proposal document. There's actually like coordination between those two documents. And so for us, leveraging not only the underlying foundational models that we're using, but also how we're building the vertical structures above it that allow for us to have very intentional cascading strategies around how are we breaking down the document sets so that we can actually focus the LLMs to have really high performance because we've cleared out all of the noise based off of our knowledge. And so a lot of the prompts engineering that the team has done allows for us to do that. And then also introduce things like a RAG strategy on how we might refer to the current plan design, because we need to move motions and we need to do workflows that relies on what is the current, which of course, a general foundational model is not going to have that information. And so leveraging both allows for us to, at the end of the day, just make it helpful and easy for the user because they just want that. They just want it to work like magic.
Yeah, they probably don't care what model you're using or like that it's even AI. Like they might be scared that it's
right.
AI.
In fact, that is the thing, especially in a highly regulated space where sometimes that actually breeds more of like uncertainty. We should talk about this kind of thing. They don't care. They just want it to work. They just want it to work in a way that they expect it. And
because I was going to say, like, what's the element then of like you're working at a startup, you're trying to take advantage of like the latest technology, but then there's also this like the most incumbent, probably like legacy type of industry you could think of. You're like, how do you combine them both together? Like, what are the challenges there?
I think you need to align incentives in the right way. And I think what I've observed is most of the big insurance companies, the people there like have a desire. They want to move faster. They want to leverage it, but they have constraints because they have big tech that's old. And it's super easy for people to say like, oh, it's ridiculous. Like you've got this old tech, but they're a $4 billion business that has acquired 19 insurance companies over the last 20 years.
They might have like 19 different systems.
You have 19 different systems.
Together, yeah.
And so it's just such a cop-out, in my opinion, where people say like, oh, they're just like these old legacy incumbents and like, how dare they? They have to like, they're still running a $4 billion business. And so what I find of these individuals who are having dinner with one last night, they're all in on trying to figure out how do they leverage knowing that they have this working constraint. Mm-hmm. And so a big part of the AI now, as I mentioned a bit earlier, is that you can start to think about moving on things faster if you can limit the constraint that they've historically operated in, which is I've got 19 systems and I have to figure out, I know this is going to break everything and I can't do that. But if you're telling me that this new tech, because you're a new startup and you're doing something interesting, actually just helps accelerate a thing that I have an incentive to get done.
Yeah.
They're actually quite open and progressive to that idea. It's just a matter of like, how do we execute on that and move it into an actionable plan?
Do you benefit from, one of your underlying carriers has 19 different systems, you integrate with all of them and you built it so it flows into the Threeflow platform, pun intended, I guess. And then when you work with the new carrier that maybe has half of those similar types of systems that they're like, are you already integrated and you kind of makes it easier for them to start using you because you've already done the hard work of incorporating all their software, like the older tech stacks?
Not really. I think it depends on their insurance companies at times. If you look at their tech stack, there are some insurance companies where all of their tech stack, they custom built themselves.
Really? Okay. And like, so each time you have a new customer, the Threeflow team might have to like build some stuff to incorporate everything. Okay.
So a big part of one thing that we did was a lot of insurance companies, as crazy as it sounds, they do not have a external API for quoting and rating.
Okay. So you have to build that for them basically every time.
And so one of the things that we did the first time was we built into them and then they were like co-developing it at the same time and it took forever.
Okay.
And so we said, well, let's not do that again. Let's actually flip it where I know you don't have one. And so we can actually help you move faster if we build the API and take a point of view on the specs and the design of it, and then allow for that to be what you build too. That unlocks two things. One, pace of the integration between us and that one carrier, but it also allows for us to be concurrent in number of projects that we can do at the same time. So it gives us more scalability because we build you can build to the Threeflow API. And I don't have any bandwidth limit on how many carriers can do that, at the same concurrent time.
Because of why?
Because we've already built the specs out to it. So now you can build into me in the same way that you could get documentation on any available external API, go get specs on the Salesforce API. And they're not constrained on number of people that can build to that API. It's just, this is live in production, you can build into it.
Okay.
And so that was one bit that we realized pretty early because you've got a custom software stack and you don't have an external API. The other part that we do see at times is there are some carriers that do use some third-party systems. And so in terms of like quoting and rating or policy admin systems, there is what you described, this opportunity to do a one-to-many, where then you sort of build the infrastructure into that third-party system. And then that unlocks connectivity across a wider distribution network of carriers. And we've done that in particular on the self-funded medical side. There's a couple of those third-party players that we have a relationship with those firms, and then they distribute out to a bunch of carriers. So we get, at a 1-to-N outcome on that.
Interesting. Okay. So it sounds like on the there's like some things that are kind of set and forget it. You've got a good system of, they can easily tie into, but then there's also an element of like there's some engineering work like that's always happening of like figuring out how to integrate with our custom system.
Yeah. No, there is. And it is definitely part of the partnership that we have with the carriers, but it's, there's work there.
Yeah. It's not, well, it sounds like there's some compounding advantages to as you add more carriers and build a network, but then there's also like some defensibility of just not anyone can just spin up and do it. Like there's still constant work that needs to be done. So kind of an interesting on the spectrum. It feels like you're in an interesting spot there.
Yeah.
And
I mean, for us, it's making sure that we've got that building in that connectivity pipe, really helps the defensibility of Threeflow, but it also accelerates like the value drive, to these customers, which then further extends like our defensibility in the business. Because for us, ultimately, the game, is how do we help facilitate all of the volume, and if we can help everyone do stuff better, then you put yourself in a really strong position of, someone else coming in and trying to take that position. It's going to be a lot harder.
And the companies, you've talked a little bit about Chicago, but the company's actually based in Seattle, or you live in Seattle. What's kind of like the team office setup? Is anything remote? You're all in person?
We are remote, so we are fully distributed as a team. Okay. We do have an office in Chicago that the team utilizes, whether it's you live locally. There are some folks that come in and work in the office. It's also what we've defined as our summit center, which means that if you've got a team and you want to get together for a couple of days and do a whiteboarding session, you've got a dedicated space that can flex to be large enough for like a sales kickoff like team.
Yep.
And that's worked quite well. And part of our sort of like the arc of us adding headcount to the team was like really in the sort of pandemic era. Just before pandemic, we were like 19 people. And so we hired a lot with that, like being intentional on it. And then the balance for us is blending opportunities for people to spend time together in person, build that human relationship and connectivity, but then also be able to recruit, from anywhere. And this is obviously people have strong opinions on
remote in person.
And I think it's, it's going to be just based on what fits best for you. And we've been successful in building a culture that has depth to it and do so in a distributed way, but it does require for you to be more intentional about it.
So any advice or anything that you think you specifically did well to make it work? I mean, I assume your opinion is that it's working. So how did you make it work?
I think you have to have like named focus on it. So you have to so things like we incorporate this into like our strategic planning of how do we like engage the team, whether it's through the week or it's by allowing for teams to get together. And so we're like really intentional about that. Okay. The other way is how we incorporate the values of the business and how that shows up in terms of the cultural element, and then how we hire and fire and promote based off of those values, and how that ties back into the ability for us to do that even in a remote setting. Mm-hmm. And so there is no silver bullet to it. I think it is discipline and focus to make sure that it is part of how you show up, and it's making sure that you're creating dedicated time for people to have that moment that would otherwise be you and I walking to go get a sandwich. And
how do you do it?
So we've done a number of things that have been successful. One that we've done is we call it lightning learnings, which is something that we do on a normalized cadence. And the premise of it is a topic that is non-work related.
Okay.
It's something that you're passionate about, and it is an opportunity for you to teach the team about it. And so we've had a bunch of folks on our crew do, everything from ultra marathon running to cooking to knot tying to all the things that you would like learn about someone if you were maybe strolling down the street, but giving like really dedicated time for people to share something that they have passion around, and then give this opportunity where people can kind of shut things off and like have this moment. And it's been really successful. And so we've got, everyone contributes where it's an open invite of if you want to be on the lightning learnings. And so part of what we try to do is during all hands for new hires, there is elements of introduction, and we ask a little bit about them. And you're able to glean some element that is a tie into, I want to know more about that. And so you can help like encourage them to say, hey, after all hands, people were asking about, you were, a game designer in Japan for a year. And like, they wanted to know more about what it's like doing that, in, a different kind of market. Would you be open to sharing that and doing that as like a lightning learning? So it's been a fun cycle.
Interesting. Okay. And then I think one thing you mentioned is that you kind of like figured things out, sort of like there's not a lot of playbooks for doing some of this stuff. Like like a stereotypical SaaS company, you can just like go to some VC blogs and learn a bunch of things. And it's kind of, it's all, but with this industry, with insurance, there's not a whole lot out there.
Yeah.
So how do you kind of figure these out? Like what's the general process of figuring out a playbook when they don't exist?
Yeah. I think that the way that we've always approached it is one, just like a bias to action and starting and trying. So we kind of think strategically on like a 3 horizon framework, right? So like what's impacting today? What are the opportunities, that are sort of emerging? And then where is it all like in service or in effort for? And using that like 3 horizon framework has been helpful in just kind of knowing where you're marching towards, but then be intentional of like, what's the stuff that's critical right now? And when you break down the opportunities to go chase and the problems to solve, the lane is, there's nothing that's magical oftentimes. You can use and leverage frameworks in different ways to accelerate the motion, but like just like pushing through and getting started is a mentality. It's actually something I really appreciate about Shahib, as our CTO. His bias to action is like, I'm just going to try something and just start. Yeah. And it will be maybe 30% correct, but like I'll use that 30% to like increase my velocity over time. And it's a common question that I get from people, even just like friends and family, of did you know how to fundraise? Did you know how to hire? We didn't know how to do any of that stuff. And I think you can learn a bunch of bits and pieces from different items or frameworks. But for me and for us, molding that into something that's unique for Threeflow and for our team was really important. And like at its core is like, just go.
Yep.
And if you just go, you just move and iterate faster. When you sit around and pontificate about the problems and like the ups and downs of it, it just slows you down. And you're just not going to know until you get something out. And I'd rather have something, be moved on faster that maybe doesn't have the results we want, because you just learn that much faster as a result.
Paul Graham has this saying where it's like action produces information or something like that.
Yeah.
So if you just do things, you'll learn things, and then you figure out what to do next.
Yeah.
Essentially.
I mean, a lot of times it's often very simple in premise of just, being intentional about what is it that you're trying to get done, making sure that it's really clear with communications amongst the team that's working on it, of like, what are we trying to achieve? And then moving with intention. And I think you do those things well, and you see the outcomes that are produced.
Yeah. Well, there's been a lot of fun. Where can people like follow you, find out more about you, Threeflow?
Yeah.
Anything you want to call out?
Yeah. Check us out, threeflow.com. We've got a number of opportunities too, if you want to learn more. If you're within the industry, you can find out and hit us up for a demo request to check out what we're building. Otherwise, you can find me on LinkedIn, and look forward to have everyone learn more.
Amazing. Well, this is a lot of fun. Thanks for doing it.
Thanks so much.
And thank you for listening. Don't forget, Bolt's world's largest hackathon ends on June 30th. If you missed it, check out last week's episode with Samir Kaji with tactical advice on raising a venture fund in today's market. Tune in over the next few weeks for conversations with Grant Lee at Gamma, which grew from 0 to 50 million ARR with 30 employees, Matt Mullenweg, the founder of WordPress, which powers over 43% of all websites on the internet, Garrett Lord, the founder of Handshake, whose college recruiting platform has emerged as a leader filling the massive opportunity in the AI data labeling space, and Owen McCabe on Intercom's impressive turnaround from shrinking SaaS company to hyper-growth AI-native customer service software. If you like this conversation, please leave a quick review or comment. If you don't want to miss a future episode, subscribe to my newsletter, The Split, linked in the description to get each episode plus a transcript emailed directly to your inbox every week. Thanks again for listening. See you in the next episode.